Good afternoon, everyone. Today is the 11th day of our 60-day trading challenge, and today is the fourth consecutive profitable day. And again, it's not about the profits as we always talk about, although the profits are already, at about 5.9% ROI. I'm not going to stress definitely on the profits, but more on the learning per se. So today was a bit of an exciting day, although it was a very clear trending day. It was a lot of excitement was there. I'll just walk you through the chart so that you will understand what all the scenarios we faced. So getting into the uh, charts, uh, this is the Nifty 50 chart. When you look at chart in isolation, you may not understand the what happened during the day. It looks like a sliding down market. So it was a very cool day. That's kind of an experience. One would have a impression. But when you are in the market, that is when you are facing the screen and doing the intraday trading kind of a thing. So then it this kind of a VIX, whatever you are seeing here, those wicks will make a big difference. And just to understand that perspective, if I look at the chart of the premium which we have sold, that is 23,250 call which we had sold. This is the green candle on which we entered. We got the entry. Our strategy gave an indication that today is going to be a market is going to go down, and accordingly we sold the call. And now you look at the chart. Now it is a 5 minutes chart. As soon as we entered, which is at 71 rupees, this is the line which is representing that 71 rupees, our entry price. Soon after the we entered into this thing, it started going. It's such a big candle you would see here, and then the next candle is the high is 100.25, rupees 0.25, which while our stop loss was 106.5. It's just about 5 rupees or 6 rupees away from our stop loss. And you are watching the screen, and you would really experience the kind of emotions you would carry. So I would that is why I'm calling this as a the candle that scared us. Of course, we it is just for mentioning, but since we are playing the rule-based trading, we don't go by any emotions. But for a normal trader, I just wanted to bring it out this point that if you don't have a rules defined rules, you would have actually probably hurry to book the loss also here, because you would have thought one would have thought the market might again further go up here, so they would have taken a hasty decision. And it's that is why sticking to a well-defined rule and having a strategy which is back tested. So we have the confidence that okay, even if it means if it hits a stop loss, it is okay, because we know it's the behavior of the strategy over a longer period of time. The strategy is profitable, and then hence we are taking that risk of being in the trade. Otherwise, if had we not tested it, had we not know the insights of the strategy, we would have easily get got scared, and we would have just got off the trade. But then again, this is one learning. The other learning is also is the contrary to what I said. Like here the market was started falling, and as I have explained in the earlier videos also, either at 1:30 p.m., that is a half of the day which we consider, or when the premium becomes half of the price at which we have sold, we start doing the trailing stop loss. So as you see here, the price became like less than the half, like 35.35 is the low of this candle. So since we had sold at 71 rupees, so it is below just above, just a little below our half of the price. We had to define our trailing stop loss, and we defined the stop loss and trailing stop loss. And the trailing stop loss again in a just in that wick, it just got hit, and then at 53.1, and then it again further deteriorated, and it went out. Like we exited the trade at 53.1 while the closing price is 19. Had we if we had missed this, or if we had saved in this trailing stop loss, we would have got a humongous profit. But that's okay. Like, because again, the two phases here. The one is getting scared of losing. Here, we could have exited if we were not sticking to the rules. And again, here, if we had not followed the trailing stop loss rules, probably we would have got a good profit. But the importance is there was a possibility that market would have gone up from here further. So we cannot, you know, predict the market. So we just have to go by defined rules. So that is how we ended the day. So it was a good learning from that perspective, from the both the sides of the game, which we could see here. And again, going back to the trading journal. So we see here we have sold the 23,250 call, which we have sold it at 71 rupees, and then we covered it at 53.1. And then the profit, and again the trading cost, as you see in the Zerodha calculator, like 56.12 it is. So we're taken as 56.15. So the net gain is 1286.35. And then we exit is about the TSL, and whatever the points which I mentioned, majority of that I have captured it in the lessons learned over here. One could go through it for better understanding. And then again, we have completed now 11 days, and at the end of the 11th day, we are at 5.91% ROI, and with a gain of around 11,811 rupees and an investment of 2 lakh rupees, which is good. But again, we don't know what will be the end result. So let's not talk about too much about the profits, but the important is for the point is, again, I'm keep repeating it. That's the just we need to learn from the the rule based trading and how it is going to be beneficial. So that's all for now. Thanks for your time, and see you next week for the 12th day analysis. Thank you. Bye bye. Take care. Have a nice weekend. Bye bye.